All right, guys, we are live. So we're just a couple of minutes early here. I thought we'd just get started. Let people come in, say hello. Come and say hello in the chat box. So we always like to know how many people are here, what you guys like, what your backgrounds are, if there's any particular questions we should kind of line up for Lance in advance. So there's 26 people watching already, so say hello in the chat box. If you're on Facebook, come into the YouTube channel. So on Facebook, you should see I posted a link to come and join the YouTube channel. It's always easier on there because we have the chat box, we can see all your stuff, and we know who you are as well. So if familiar with Lance or me, we can say hello to you and figure out who you are and kind of go from there. So so let's get started. So that's 8:00 Central Time. I'm in Austin, and Lance is outside of San Antonio now, right?
Yep, we're both within an hour away.
Yeah. So one of these days we'll be doing one of these webinars together. I think Matt's been threatening to do that as well. He's been in Austin for on and off.
Put it on one screen instead of two.
Yeah. Yeah, exactly. So at some point we're gonna have to get together and do one of these webinars where we're in the same room. I don't know how that would work, really, right next to each other or something. But yeah, welcome guys. Seeing more people coming in, so it's good. Say hello in the comments and the chat box on the right. Hopefully we can provide some value today. One thing we want to know before we get started is how many of you guys are brand new to selling options and have been introduced to Lance and Theta Traders and myself via the free mini course that we've been giving out recently called How to Win 90% of Your Trades in 90 Seconds. If you can let us know in the chat box if you're one of those people, that would be really helpful, because we could kind of tailor this presentation a little bit more to you guys. Or if it's a bunch of people who are super duper awesome options selling geniuses who have been selling premium for years, we can focus more on the futures side of things, which was kind of the plan. So any feedback from you guys in the chat box will be noted, and we can kind of take the course that we need to do based on what you guys want. But Lance has prepared a presentation on the futures trading strategy in particular. So if there's no objections to that, then we'll probably just launch into that and start talking about this cool new strategy.
Sounds good. So I'll start the presentation. Feel free to leave any questions on the comments below. We'll have quite a few breaks there for questions. If it's a question that's pretty straightforward, that has to do exactly with the slide we're doing, Russell could definitely just ask it out and I'll answer it there. If it's a little bit more detailed or more invigorating, so to speak, feel free to leave it on the comments, and then we'll have some breaks to actually go over those things.
A few people are already answering. So a few names that we know: Shyam, we know; David Silverman, we know. I don't know if you know Stephen. So Fairgraphs Theta Trading experience. So it seems like pretty experienced so far. So Edward's intermediate, Tom's experienced. He's new to futures though, so that's good. So hopefully you'll get something out of this. Steven's got Fairgraphs with Theta Trading. So far it seems like more of an experienced audience. So that's cool, because this is kind of slightly more advanced than just selling a cash secured put, right?
Right. So we'll make it a little bit more detailed for you guys that are intermediate and advanced. But if I go a little too far, or if it's a little confusing, feel free to stop me and have some questions there. All right. Steven's here as well. Nice to join you guys. All right. I'm gonna share my screen real quick. Let's see if this works. If you could just let me know if it comes up.
Casey's here. He's new to future selling. Hey, Casey. I hope you're doing well. I'm going to put Lance's full screen in 1 second. So there we go. So hopefully you guys can see that pretty clearly. Let's talk about future selling and wheeling in particular.
All right. So we're going to look at a wheel strategy. I've been part of the Option Wheel Facebook group for a few years now, and been doing that for individual stocks. But then recently I've been looking at using this with futures. So /MES, it's the micro human futures on the S&P 500. And it is a good strategy, as we'll see through the numbers shortly. Just a little bit about me. Graduated 2003. Here's my young picture near good old Ben Franklin. Right after I graduated, I decided to be a financial advisor. I got my Series 7 back then, insurance licenses and all that. And I worked for Ameriprise. They spun off from American Express. Also worked with Thrive in Financial. So I know a lot of the basics between how to do, proper asset allocations and modern portfolio theory and whatnot. And I thought that would be a good career of mine, because I'd be able to teach people about money and investing, which is I'm very interested in. But it ended up being just find new people put them into the program that Thrivent has, and then just move on. And it was just constantly finding new clients, not really helping them as much as I wanted to. I know if you're looking at financial planners, if you talk to an experienced one for, they've been working 5-10 years, then they might give you a little bit more of that attention. But if it's a relatively new advisor, they're not going to really do too much with you because they need to build up their clientele and whatnot. So I actually did digress, and I became a high school science teacher. I was a biology major at UPenn, and I'm still doing that today. 15 years strong at this point. I actually did a year after college as well, and wanted to try to build both of these together in some way. So we ran datatraders.com. It's been a little over a year now with me and Russell.
Yeah.
And I did a YouTube channel a few years before that. If you YouTube Investing Teacher, you'll be able to see hundreds of videos that we've made so far. Pretty much all walks of investing, dividends, growth, small cap value. And then we diverged a little bit into option trading about 2 years ago or so. So just a little bit about me. Some of my main goals in life is to make enough, now I'm saying in quotes, passive income. There's a little bit of work to do, but in order to just sell options, you could literally just look at your trade tab, see a good option, click a few buttons, and then next thing you know, you might be making money. So it's not going to be hard manual labor here to be earning pretty decent money. So it's semi-passive, you could say. I do want to teach others. I'm teaching my 2 daughters. We got really excited when they got 58 cents in McDonald's dividends recently. I'm also teaching the students that I have. We have a homeroom every day, and it's pretty wide open for about 25 minutes. We could pretty much do anything we want to that's productive for their lives. So we do talk about stocks, options, and some of the basics of personal finance. I want to be able to share all my trades with others that want to learn, and we do different strategies. Sometimes we may or may not even take certain trades, but just to see what might actually come up from it. And I do want to give back to the community. We do some donations to operationhope.org. They work out of Atlanta to help small businesses to get startup funding and whatnot. YIS.org is for the youth of America. They have their own investing group. And I do run the high school investing club at our school. So my basic trading philosophy is obviously with more risk could come more return. And when selling options, you want to be very aware of the amount of risks that are involved. So I want to look for consistent strategies. And my personal goal is 2% a month, which over the long period of time would beat S&P 500 in almost every month. Obviously, S&P could shoot up here or there certain months, but it could also go down quite a bit. And I'm looking for consistent ways to get those positive returns. And we look at very high probability trades. If you did the $7 free course that we offered, we're showing you pretty quick ways to get 90% success rate on these trades, right? So looking at all these different strategies, buying out of the money calls and puts, buying leap options, buying stock, I found that selling options are possibly the best method to get those safety first consistent strategies that I see. Now, one of the things when you're thinking about selling options is you could either go to a casino, have your money with you saying, oh, I'm willing to, lose my $500, but I want to turn it into $5,000. Or you could just be the casino instead. And then you're taking those bets from people, right? So if you sell very far out of the money options, let's say a stock's at $100 a share, and then you're making a bet that it's not going to go below, say, $85 in the next month, that's going to be a pretty high probability of working in your favor, right? The stock would have to go down over 15% in a month in order for your bet to lose, right? So a lot of these bets you could almost consider as like the sucker bets. When you see the people in the gambling, they're drinking way too much. There's a reason why they're giving those free drinks out, right? Because then suddenly they might be betting on hitting on 17 and making bets that are very low probabilities. The casino automatically has that slight edge. And then I look for trades that have an even bigger edge. When possible, you could look at a lot of things with implied volatility, option pricing. Sometimes you could actually sell an option for a few dollars more based on a few minutes later, and that might be worth the bet essentially in selling them compared to just waiting on it. Now, why does selling work well in today's market? Obviously, it's been pretty volatile right now. I've been hearing a lot of people, making a decent amount of money when the market goes up 2% and then losing it all the next day because it went down 2%, right? And that's not a very consistent way to earn money unless you're just going to buy and hold for very long terms, right? Now, if you're going to say buying a call option, and if you buy it out of the money, so the stock's at 100 and you're buying a $110 call option, you not only need that stock to go up to 110, but you do need to get it in a pretty short period of time in most cases, especially if you're selling like a weeklies or monthly options there. So the issue with that is theta or time decay is taking away that value of the option each day, because as you get closer to that expiration date, it's going to have less time for it to get to the price that you need it to get. And then after a while, if there's only a few days left and you're still not at the money, then you could pretty much be near zero at that point. And then a lot of people might just cut their losses, but they could be pretty big losses at that time. So when selling options, time is working for us. We're pretty much the opposite, because every time there's a buyer, there's a seller. And more recently, been selling a little bit more call options just because of this down market and trying to take advantage of that current downturn. This was the 0 DTE trade posted today on Data Traders. So we posted at 9:05. Recommendation was the XPS at the time was 38.52 and change. We went call credit spread. So we're essentially selling a call pretty far away from that initial price, 39.20. It's about $70 different than the original price. And then we're buying a 39.30 call. So that's a call credit spread. The reason why we do that is you'll be able to be pretty effective in your buying power instead of just simply selling the 39.20. And we sold it for $40. That'd be a 4% gain if it went till the end of the day. We do put stop orders in place. Sometimes those sucker bets could go against the casino there. So you want to cut your losses when possible. And we usually stop around 3x premium. We stop at 1.2. This trade actually only went about an hour and 15 minutes or so, and we were able to buy it back for $15. So we essentially waited for theta to decay it, and then we're able to get out and be safe for the rest of the day.
Yeah, very cool.
Are there any general questions so far?
I don't see anything, just people saying hi. Oh, wait, somebody did. So Robin is asking, where can I access your trade recommendation for 920 that we see on the screen? So, boom, is that in the spreadsheet that you gave me earlier for your track?
Yes, it's on the spreadsheet, and it's also on the Discord channel that we run in our service. So
Okay,
we'll go over all about how to access these trades when you need.
Sounds good.
Any other quick questions?
Nope, I think that's good.
All right. So again, I want to go over that risk strategy because you want to get safety first, right? So what if you go against that lucky player? There's always going to be that one player who happens to spin and get those near jackpots, right? So we want to look for ways to mitigate our risk. We're going to take many small bets. We give option alerts every day, a cash secured put, credit spread. We do 0 DTE. We take longer dated trades, sometimes a few months out. So you want to be spreading it out amongst all these different, slot machines, for instance, and own all these slot machines, not actually put your money in them because we're selling options, right?
Yeah, good analogy.
If you're going to be taking small bets and then putting in your quarters into 50 different slot machines, it's not going to necessarily help you if you're spending that money, but it could help the actual casino because they're taking in those set returns over time, right? You also want to take your bets from many different players, meaning different stocks, different strategies even. Depending on if volatility is high, you might be doing some strategies a little bit more than others if volatility is low, right? And then you want to do your research not to take those bets against the quote-unquote straight shooters. Those poker players that have that stoic look and sunglasses on. You have no idea what they're doing. And then if you try to bluff them, they can see right in front of you, right? So you don't want to be taking bets where there's not much of essentially a positive expected return there. So
hey, Lance, do you mind if I chime in real quick? Can you hear me?
Yeah, go ahead, Raj.
Okay, perfect. So going back to this casino theme, think about it this way. It's more about odds. So when you're taking a trade, typically you're looking as well, I believe, at delta, just kind of as a key marker to see kind of what the risk is like. So the example I'd share, at least, if we're taking a 10 delta option, for instance, if we're selling a 10 delta strike put credit spread, or put for that matter, essentially that means that there's a 90% chance that what you're going to do is win money. You're not going to win a lot of money. That's why, why would you win a lot if you're winning something that's a 90%? I mean, that you won't be rewarded big.
Right.
But the really neat part as well with a lot of what you're doing is you're also not taking it all the way to expiration. So you're closing it earlier. So you're actually increasing your odds even further. I don't think there's a way to statistically figure out how good it's getting by doing that, but you're definitely sweetening your chances. And so that's why we're winning big, or not even winning big, winning often, I should say, winning often and small. That's what a casino does. They're playing the odds. I mean, they're not winning 90% of the time like we are, and so that's something to really think about. So
there is also some studies with back testing that I am looking at where it does increase your odds of success slightly if you do close them early instead of waiting until expiration. And then obviously, like if you could make it decay, 70-80% in like half the time, that might make sense in those cases just to close the trade anyway. So then you get the risk off your table and you already extracted most of that theta decay as it is. Yep, good points.
Yeah, that's a good point. You want to put your presentation back up, though? It disappeared.
Yeah, because I wanted to see Raj over there.
Yeah, so when that happens,
thank you.
We can. Yeah, we needed to see you. Say hello. Okay, I'm adding the thing back to the stream. So there we go.
All right, do you guys see the main screen?
Yeah.
All right, so let's go into the futures a little bit here. So the main futures contract that I've been selling options is the /MES future. You could just type that in your brokerage account, like Thinkorswim or Tasty Trade are the two that I use. You do need to get futures approval in order to do that. And I can help you guys actually get approved for it, but it's pretty straightforward. You just have to say that you know your options and know different possibilities there. So a futures contract, this is the one that's specifically tied to the S&P 500. So it pretty much tracks the S&P 500, but it does so pretty much the whole day. It's 23 hours a day, and it's every day except Saturday. So for busy people, this is actually a good way to go because you could do these trades overnight. And I'll show you a sample trade shortly where you could do it right now if you wanted to, right? This is a pretty highly leveraged product though, so you do got to be a bit careful using it. However, because of that, it uses very low buying power. And we'll see a comparison of if you want to sell SPY from the S&P 500 or an MES contract. Just FYI, a one strike move, so if it moves up a point, that's worth $5. And I'll see different examples here, but it is a reasonable way to earn around 0.5% a week on really, really safe trades. And then if you want to go a little bit higher, and we'll show you some strategies to get at least that 1 to 2% a week on fairly higher deltas and some momentum plays that we'll see shortly. So this is an example of a weekly put. I think I made this about a week ago. So if you take a 0.04 delta that was 8 days away, it was paying 2.35 in premium. You multiply that by 5 because every time you have a futures contract with MES, it's a 5 multiplier. You'd make $11.75. Not really the end of the world here. However, it used $923 only in buying power. If you just take the $11.75, divide by 923, you get a 1.2% return on your money in only 8 days. And it's a 0.04 delta, meaning there's approximately a 96% chance that this trade will work in your favor, and then you would keep that 1.2% in a week. So I think it's a pretty powerful strategy using that leverage and lower buying power for it.
Yeah.
And you can see in the trade dialog here, I just literally clicked sell 37.50 put. Let's bring in 11.75. There are some commissions there, but a credit of 928 for $900. Looking at a percent in a week.
So where does the leverage come from? I've never traded futures. So why is it 5x multiplier? Where's that coming from?
The futures contracts are all different. So if you have ES or backslash ES is a 50x multiplier, MES is a 5x multiplier. It depends on which futures contract you're actually trading. You can do this with the QQQs. That's backslash MNQ or NQ. The MNQ is a 2x multiplier. So they have different multipliers for the different possibilities. They also have commodities as well, like gold, oil, and whatnot. And those all have different multipliers depending on which one you're looking at.
So ironically, the trading futures, which most people think is more complex and more risky and more of an advanced thing, actually might be easier for newer traders in some ways, right?
Possibly, but you do have to be aware of the risks on it because futures can be very risky if you don't know what you're doing. Okay?
Right.
Do you find so I'm also kind of curious, would you be more likely to place a trade like this on a super red day to get more premium, if you will, or is there any method to the madness? Just kind of curious.
I'm gonna go over that a little bit later in this presentation, but in general, I want to find the strike price before I look at the returns because I want to get the safer strikes going. So 37.50 could be perfectly fine. It was a 0.04 delta, but if it turned up to like a 0.14 delta or so, even though it would pay more money, it may not necessarily be worth the risk. And I look at supply demand zones. I look at momentum plays, different indicators in order to see if it's a relatively safe strike or not. So I personally don't wait for the red days, but I know people that do, and they could still do okay that way. But I'd rather be in the safer strikes. Here's a simple strategy that will work for quite a few conditions. That doesn't mean all of them, but you can sell that 0.1 delta put. If you did the quick start video guide on winning 90% of your trades, you sell a 0.1 delta put, you have approximately a 90% win rate, and you could sell it on MES expiring about a week later. If assigned, we're going to do the wheel strategy in this case. The wheel strategy is essentially, let's say with stocks, you're going to sell a cash secured put, and then if you get assigned on it, you'll take in your 100 shares and then sell a call against it and take in premium in both directions.
Yep.
You can do the same thing with futures. So if you sell an MES put that happens to go into your strike price and then get assigned, you would get assigned one contract of that MES. You don't get 100 contracts of MES. I actually tested that out many times. I was trying a few months ago to purposely get assigned, and it just wouldn't because the stocks kept moving up. And I was like, come on here. But eventually I did get it, and you do get assigned one contract. Okay. We'll go over what the buying power looks like for that. It'll be a little bit more than the initial trade, which is definitely something to consider. But let's say you're assigned that MES contract, then you could sell calls against it just like selling stocks and then take in premium that way. As you'll see, a lot of times selling those call premiums will pay really big returns. The only big risk is if it keeps going down, then you might actually be losing a decent amount of money.
Yeah.
But if it's called away, then you just did your turn of the wheel and you can go back to selling those 0.1 delta puts again.
Yeah. And Lance, I'm getting a couple of questions about potential losses and things. Do you have a slide on that coming up? Okay, perfect.
Yeah, we're going to get to that shortly. Any general questions on what I just covered with MES?
I think everybody's good. I think the two questions that are kind of cooking at the moment is if the trade goes against you, how much do you lose? And also the max loss type of questions as well. But it sounds like you're coming up with that in the next few slides, right?
Let me just show it. Can you see my thinkorswim right now? The main screen?
Yeah.
All right. So here's MES right now. Overnight, it's relatively flat. Today was a fairly big down day, right? So if you look at the trade tag for MES, if you go, say, 10 days out here and you sell a 0.1 delta put, I'm not necessarily saying it's a good trade, but on your 0.1 delta here, you can make $47.75 in your premium, use a $611.50 in buying power. However, your max loss does say $18,000, and that's what freaks people out, which is definitely understandable. You should freak out if you didn't know what that means. But essentially, each point is a $5 multiplier, right? So if you take 3,875, it's the current price, multiply it by 5, we're getting very close to that max loss. The actual max loss was based on the 3,600 strike price. 3,600 times 5 is the 18,000. So you would lose $18,000 if MES went to zero. So just imagine SPY went to zero. A lot of issues with the world. Instead of,
yeah, I don't think that'll ever happen, but at the same time, it's so useful to see at least where those numbers are derived from, because I've always wondered. They look terrifying. It's like,
Right.
Here I am collecting, we'll say $47.75 with a max risk of 18K. I mean, that's probably why a lot of people shy away from selling options on futures just when they see that.
Right, but it's no different from shorting a stock, though, right? You have infinite loss potential, but there's a thing called a stop loss that people use, right?
Yes. No, you could lose a decent amount of money. I'm not saying that there's no free lunch here. Every point it goes lower. So let's say it went down to 36.95 or so. You would still be profitable in this trade because you would be down 5 points times a 5 multiplier. So you'll be down $25 when you get assigned the actual contract, but you took in $47.75. So even if you get assigned and it just came very close to it, you still could be profitable in that first turn of the wheel, so to speak. However, if MES continues to drop, even when you're selling your covered calls, you could possibly lose a decent amount of money. So that is with really big downturns, however. One way to look at that is, let's say that we were assigned at the 38.75, okay? And we're selling calls against it. Just to make the numbers a little bit reasonable, let's sell the 3,900 call. So that's 25 higher than the current price. You could make a premium of 60.75 times the 5x multiplier. We're looking at a $300 credit in a week, which is very good, obviously. So even if MES continued to drop a bit, you are bringing in a good premium for the week. You may not necessarily get that every week, of course, but just waiting and being a little bit patient for MES to bounce back up could be paying quote unquote dividends at that point, because you're getting the premium on both ends of the trade, right?
Yeah. Cool.
All right. So that is a little bit on mitigating risk and looking at how to actually get through this. So buying power is one thing I want to talk about, because I did use those initial numbers with the initial prices. I recommend leaving at least twice as much in your buying power in cash that you don't trade with. Okay. So with other positions in place, you could also add on MES contracts. You got to be very careful of that. Like I'm using Tasty Trade. And if you have a few put contracts in place, you could possibly sell another put contract for less buying power than what I was just showing you in Thinkorswim, because they're using what's called span margin there. And span margin works as a daily, essentially maintenance on how much risk is in your portfolio. So for example, if you buy one MES contract, it might cost about $1,400, give or take. But if you had a strangle on where you're selling a call and a put, adding another contract could be quite a bit less, depending on what your current risk is in your portfolio. Okay.
That's cool.
Does that make sense, Roger, Russell, or anyone in the group?
I don't see any more questions, and that makes sense to me. So, yeah.
All right. So let me go over a little bit more of an advanced strategy here. And this is using a little bit of technical analysis to find certain advantageous places to place your orders and possibly to let momentum ride a certain order more. So this is Tasty. This is a Trading View, and it's an indicator that I'm using that we're about to give out to Theta Trader members. And you can see these green and red bars. Some of you guys that are pretty intermediate or experienced might notice these little supply and demand zones that we're seeing. So if you see up here, this is the red bar for demand, pretty much a zone where it's not really shooting above it. And then down here are another multiple touch points where whenever it touches around this level, seems to bounce back up. This was actually today with MES. And during lunch, I was actually considering entering on the second green candle because there was momentum bouncing up from that bottom zone. So using these different support and resistance lines, depending on your time frame. So if you're doing a 7 DTE weekly, you probably want to look at a 1 hour to 4 hour chart of the candles, and then notice where your supply and demand zones are to possibly look for advantageous trades. Like for example, if we're at 38.80 or so right now, you can see a current demand zone here. If you're doing a quick day trade type scalp, you might want to sell a put a little bit below this level, because as you can see, multiple times it touched there and then bounced up, bounced up, right?
Yeah. Cool.
Now, here's a new strategy that we're also looking at to possibly amplify returns. This is a little bit complicated, so I'll take it a little bit slower here. Let's say that you own a contract on MES, and then you sold a call against it. So you're on the call side of the turning of the wheel. What you could do at times are, especially if there's a short-term trend, so if you're looking at a bounce right here, and this was at lunch today, let's say you had a covered call that happened to be profitable at that point, like maybe there was a little bit of an uptick in the previous few days. What you could do is maybe get out of your call contract here. That would usually be a slight loss in the actual option part, but you're still owning one MES contract and you're long that contract. So what you could do is possibly get rid of the call contract at a loss here, but then ride this up for a profit. Does that make sense, Roz, Russell, anyone else in the group?
That makes sense.
Yeah. Can you guys hear me?
Yeah, I can hear you.
Okay, sweet. I might have changed my microphone settings, and if I'm too loud, just let me know. But what you're sharing is really, really important just to think about. The idea of a covered call, the awesome part about a covered call is you're basically pre-selling the item, if you will.
Yep.
That's an awesome thing, but imagine if you have a lottery ticket, the problem with covered calls ultimately is you're limiting your gains. So what you just shared is a way to think about creating the potential for unlimited gains, if you will, by simply getting rid of the covered call when you're seeing the momentum going in the right direction, if you will.
Exactly.
That's at least my take.
And we're going to be doing these trades when we're already out of profit. So essentially, when you see this bounce, if you wanted to, you could literally buy your call back and then also get rid of your long MES, and that would be a profit already. So we're going to look at specific situations where we're already at a profit. You could place a stop on your long position a few points lower than the current price. You'll still be profitable even if you stop out of it, but you might have that potential for this big momentum. Like imagine if you did it right at 38.50, you saw this big uptrend and you even handle that bar and you're just really going for broke here. You could possibly close out at 39.29, which would be a 70-point increase times a 5 multiplier. I mean, you're looking at $350 in one contract right there off maybe $1,000 in buying power, which would be very powerful to do, right?
Very cool.
A little bit on managing positions. Let's say a put is expiring out of the money at expiration. So that means it worked in your direction. And this will happen at least 80-90% of the time, especially if the deltas are right. You can just simply let it expire and sell another one, the next Sunday night if you want. I like to do them Sunday night just because, getting ready for the week. Like, let's sell some premium right here. You can also do it in the Monday for the next week out. But if your put does expire in the money, then you're essentially going to either roll for a credit if you want. That means you buy back that put option and then you sell a new one, usually a little bit lower, so it's a little safer. Or you can just let it get assigned and sell covered calls. Now, if you're going to let it get assigned, you do have to have a decent amount of buying power ready. That's why, again, I recommend if the initial contract to sell an option costs, say, $600, you want to leave at least $600 more in cash for these situations when they do come up, okay? Any general questions from the group or members that are watching?
So far, nothing. Mike has posted that he's been doing a similar thing with MES for about a year now. Let me just put it up. It's easier. It's not a question, but it's a cool statement to see. So the fact that it's open 23 hours a day and you can do them virtually any time or day or night is pretty cool.
Yeah.
So,
hey, Lance,
Yeah.
do you intend on touching the different types of futures, meaning MESU, MESZ, with the different expirations and how that works as well?
That was my next slide, Raj.
Oh,
Read his
wow.
mind.
Excellent.
Yes. So the second bullet point, futures do expire. So MES, what was it? I think just expired last Friday, and now we're in MESZ, I think. I forgot the exact letters. I think it's right. Futures do expire, and they are cash settled, meaning that you would have to put up the difference in the cash from whatever the contract was assigned in to what the current price is. So if that happens, you would want to roll to the next expiration cycle. And I'd recommend doing this at least a few days before expiration. People and theta traders noticed that my current wheel-based put was 2 weeks out because I didn't want to make it expire on the expiration of the futures contract, which is definitely a good point to consider there. A few other things to watch out for. If the position does go against you, and let's say you get assigned on your put and it continues dropping down and we have 15, 20% dip, you're not going to make a ton in the call side, but that's true with any wheel strategy. You sell a put at 100, it drops down to 80. You won't be able to get much selling a call at 100 anymore, right? Because it drops so much. So that is something to consider. It could use more buying power than you initially thought, especially if the market keeps dropping. So just be aware of your buying power requirements there. And I think in general, it helps to have a helping hand with these things, especially if you're in a futures contract and you're not 100% sure what's going to happen. Hopefully things to look out for, right? So going with that, just wanted to make the quick pitch for theta traders. I know we have some current members in here. We have some possible members in the future. So just a little bit about theta traders. We do provide one cash secured put and one credit spread each trading day. And these do have very high probabilities, low deltas. We give it in Discord. You get notifications on your phone from it. Pretty active on there. A lot of people DMing me one-on-one. You can also ask the group things. We're going to say where to sell it, where to buy back it to get out of the trade at a profit. And these longer data ones, you can do pretty much any time during the day. You could do them overnight and leave the order placed for the next day. We're going to be adding on that one weekly wheel trade for MES. We're going to say when to enter, when to exit, and then when you want to possibly ride the momentum for gains. This is an optional part, but I am going to be testing these out with actual trades to see. These are only going to be situations where we already got assigned on the contract, so it's already a pretty low percent there, but then also in a good situation where we could ride that momentum for it. Some of you guys are aware we do 0 DTE as well on SPX. Every day of the week, about 30 minutes after market open, we want to see which direction the market's heading. If you look at SPX this week, you would have some big turns like right around the 30 minutes. So the buyers and sellers are trading places pretty much. You're going to show the exact prices of where that 0 DTE will be placed. We'll mention a few data on volatility and whatnot, and then what strikes we're looking for. Here's a few quick testimonials we got. There's so many of them. I don't want to flood you guys with them, but followed 40 recommendations, no losses, one break even, one still open. One of the best things he saw is a 0 DTE. He knows how to make sure he mitigates his risk by not capping his losses. And then we look at, again, those 2 standard deviation, really low deltas. It's a great way to consistently hit those base hits. And that's what we're all about, trying to get those constant base hits. We're not trying to make 100% on our money overnight here. You can consistently get those 2-3% on your 0 DTE and then go for slightly higher per monthly on the longer dated ones. You just keep doing that casino, right? Glad I joined the group. Sounds good. I think you do a great job of deltas, probably of profits, more of a set it and forget it trader, and doesn't want to have to babysit a role. As you see when we manage trades, if it goes against us, we usually just stop out of it, and then we'll just enter a new trade. It's all about the probabilities. Being a casino, taking more and more of those bets, right? Thanks again for YouTube. Appreciate buy to close alerts as well. Some people, they will place a trade in and they're wondering when should I get out of it. So I definitely recommend when I want to be closing these trades. All right, so Russell, do you want to talk a little bit about the special that we have going on?
Yeah, I was thinking there's just been a bunch of questions, so we should probably cover that before we give them the soft pitch to join.
Okay.
On
Let
so
me
there's
find
lots.
the share.
Hey, Russell, before I forget, I'm going to bring up a conversation that you and I had last night about how many times, sadly, in this industry, people just disappear. They vanish. Lance hasn't vanished. If anything, he's growing, obviously as a person and also as a trader. And so I think the world of Lance, and quite honestly, it only makes sense to commend that level of commitment that you have to your students. And I say your students because you're also a school teacher, but every one of the members, I think all of us were students as well, and we share a similar passion. So thank you, Lance.
Yeah, no problem. Roz is very busy with his work. Sometimes he'll send me a post, and I immediately responded. I'm waiting for 3-4 hours. He's like, "Sorry, I've been." Then that post is waiting for you. Whenever you're ready for it. We're all students. I'm a student too. I'm not going to know 100% of everything.
Don't take this the wrong way, Raj, but your face is about to be covered by a question. So I just popped up. You can still see you just above it.
Yeah,
there, so.
No problem.
So the question is, how often have you seen a loss on your MES trades? Is it typically in line with the delta probabilities?
As it is now, it is very close to the delta probabilities on the initial possible loss on a trade. Now, we don't mind getting assigned on these as long as we're in a safe strike, hitting that support level on the bottom and then being able to sell calls on the other side. But yes, if you do sell a put on your MES trade and it goes below that put quite a bit, it would be an initial loss. However, you're willing to wheel it and then profit on the other side. The deltas on MES and the deltas on SPY and SPX are pretty much identical if you look at all three of those and look at what strike prices we're looking at and the expirations. There's almost no difference whatsoever. So the same data applies for looking at SPY and SPX.
So I'll share my perspective as well, if you don't mind. I've done a lot of your trades actually with ES options, mainly because I'm using Schwab, and Schwab unfortunately does not allow MES options. So I am allowed to do ES options or any type of a mini option I can do, but I cannot do a micro option. With that being said, most of the time these are winning. There are personal situations for me where I might actually have to close them early for a loss, particularly if my whole portfolio is going under, if you will. Then you're essentially just trying to save the ship. So you might have to close those types of trades early. And that's actually where you, my investing teacher / friend, always tell me that I need to do better with my margin management, meaning stop going so big. You need to have that cushion that you described. And the question always is, well, how much of a cushion do I need? So sometimes I'm pushing it to the max, but at the same time, for the most part, I feel less stressed with these types of trades because they are overall high probability.
I gave you a little bit of tough love the last few weeks because thinking maybe you'll oh no, but then I'll send you a meme about something else on the side, so it's all good.
All right, thanks, Raj. So now there's another Danny comment here. Is it likely or rare that an MES contract gets assigned, but then loses money again by the short call getting called away on an up move or whipsaw?
Okay, so if you sell a put on MES, and then it gets assigned, or if you just simply go long on MES and then sell the short call, your short call could actually remove your long contract, just like with stock anyway. So you're not going to necessarily lose a ton of money. You're renting out your contract at a certain designated premium to collect a certain amount of money. So you're not really going to get whipsawed on that one. If you did get rid of your contract and then just sold short naked, then yes, it could hurt a bit, but we're actually holding these contracts. So,
okay, cool.
Good question though, and that's a common question that I hear with a lot of people wondering about.
A lot of questions. So here we go. Here's another one. Do you set your stop loss on the put and or call or the actual MES price?
For the wheel strategies, we're actually not setting a stop loss on them. We're letting it get assigned and we're okay with it by selling those pretty safe strikes, 0.1 delta or less. One time out of every 10, you would get a sign based on the probabilities. So we're not thinking about it as one trade and then we're out on these particular ones. We don't mind getting a sign and then wheeling them by getting a sign until it calls on the other side. We do stop losses, however, on individual like spreads, for instance,
Right.
because if you're taking in, say, $30 for a $500 risk 5-width spread, you don't want to lose a full $500 in those cases. So those we do stop losses on them.
I think the latter part of that question, actually, if I were in a long, I probably would have a stop loss on that MES.
Yes.
What I really like about futures as well, I feel like it's a little bit more nimble than stocks. So the example that I'll mention is you could be long. I'm just going to pick a number. Let's say if you're long at 38.50, that's your cost basis, if you will. You might set your stop loss at 38.52 if we're going on a run up. And then what you can do very easily at that point, if we continue that run up, you just manually trail or you set a trailing stop for it. That way you're capturing profits along the way and guaranteeing a win, which psychologically, for anybody that's doing this, the nice part about doing that is guess what you can do? If you actually set that stop, you can walk away. You can go use the bathroom. You're not constantly chart watching, if you will. And so that's something that I really think that if and when you end up long or short on any of these positions, rather than just not looking at it, to have that stop loss, I think that helps tremendously.
You're right. I did one in the last week where I was long a contract, set the stop, and then I had to teach chemistry. So I didn't even look at my brokers at all for the whole hour. And then when I got back after class, I'm like, oh, that stopped out. But I'm happy because I locked in the profit that I wanted.
Yeah. All right. Another question, Stephen Johnson. How do you calculate the dollar amount you're going to need in order to cover getting assigned? Is that buying power effect number in Thinkorswim?
Yes. If you're looking at it as one trade of one MES contract and nothing else going on, then it would be. If you have multiple trades going on, it is pretty complicated to actually know the exact amount of money that you would need. But in most cases, again, at least the same amount of buying power in cash on the sidelines to deal with those are usually okay. I know with Tasty Trade in their recent book they were mentioning the initial buying power effect would handle pretty much anything besides that 2 standard deviation move. So if you hit this 2 standard deviation and it keeps dropping below that, then it would be more than the max loss of the buying power. But in general, just general rule of advice, if a trade costs $700 selling a future option, leave another $700 in the side. And that covers pretty much every situation I've seen so far. But it's a very good question I've seen.
Okay, cool. And then here's the next one from Shyam. Have you been assigned when you were trading with the right deltas?
Yep, and we all should be because it's all based on probabilities. Just because you have a 0.1 delta doesn't mean it's always going to work. Right. I'm not going to lie to you guys. Every single trade does not work with us, right?
Jerome Powell, that's the...
He's coming around. He's about to call, so be ready in the afternoon.
Yeah. So
it's all based on the probability. I have my little Pascal's little dot thing here. It's a good little simulator. It has the individual Plinko board, so a dot could go left or right. So let me do it with you guys live. I'm just going to flip it. Ready? I don't know what's going to happen yet. We'll see.
Turns into
see these little gray dots that came up. Yeah. I tilted the screen. I tilted it a little bit, but you could see some of them are moving to the other direction, right? You might happen to be that one little metal dot that happens to be in the wrong side of the trade, even if your deltas are safe. But one of the key things is how do you mitigate that?
And that's what you're an expert at. So you help a lot with that type of thing. Yeah. So Stephen's asking, what do you mean by wheel it? So it's the wheel strategy. If you're not familiar with that, I think what's a good resource we could give them to check that out?
My YouTube channel.
Yeah, so I put your YouTube channel in there.
If you type in investing teacher wheel, it'll come up pretty quickly. And I could put it on the comment section if you want, but let's see if I can find it while you're talking.
I posted a link to the channel Lance's channel right at the top of the questions here. So you can scroll up and find that. But yeah, let's keep going because it's almost been an hour already. Can you believe it? It's crazy. So here we go. What expectancy have you tracked on the strategy? Win rate, average win minus loss, average loss.
Yeah, we have that in the main spreadsheet for theta traders.
I'll post the spreadsheet again. Then it covers it's huge. I've never seen anybody record all their different strategies so carefully and meticulously as Lance. So
and Russell, real quick, I left my YouTube video on the wheel strategy if you want to post it to the group because I'm not able to put comments right now.
Okay. Yep. So I just posted the track record. I'll just post the link to your video here as well.
So right now on the average for the longer term low deltas, we haven't had any losses yet. And we've been averaging about 2.3% per month on the very low delta monthlies. We're just recently starting out the weeklies for wheel. So I don't have any current data on the wheel ones, but we do have on the longer dated futures.
That's great.
Yeah. So I think we've come to the end of the questions. So we should give you guys an opportunity to come and join Lance and Raj. Raj is active in Theta Traders as well. And so the way we've been doing this until recently is we basically, every time Lance has come up with a strategy, it's gone into main Theta Traders, right? So everybody has access to it. But it's getting kind of insane because he has stuff from 0 DTE to cash secured puts to covered calls, all this different stuff. And so what we've done is we started what we're calling the inner circle, which let me just share my screen. I'll show you kind of what that's all about. So just give me 1 second. Got to find this. So share screen. All right, just get this up. All right, so you guys should be able to see my screen. Okay, can you guys see it?
Yep.
Okay, cool. And so what we've done is we said, hey, Lance basically gives so much time to these people that join for lifetime. So we've kind of reframed the lifetime as more of an inner circle because of the extra attention you get from Lance. He'll jump on one-on-one calls with you on Zoom, explain everything. So what we've done is we started this inner circle, and current Theta Trader members that are not lifetime or yearly can upgrade to this. We can figure out a deal with you guys or whatever to get you into this, because this is where most of the new strategies like this awesome MES strategy is going to go. And so I just wanted us to go through kind of what is included in this and kind of go through that. So hopefully you guys can see this clearly enough. Lance already covered the fact that there's these different strategies, right? So you get the in the Discord, which you can set push notifications to your phone if you're not familiar with Discord. We get a lot of people coming in to Discord who are not that familiar with it. And that's been a bit of a challenge for us to try and get them to see you can get Discord set up in a way that is really, really user friendly, and that you can get alerts to your phone with push notifications. So if you're busy throughout the day, you don't have to worry about bombarded with noise. There's ways to sort all that out. So there's a lot of information in Lance's Discord, but it's all very manageable with a little bit of finesse. So the main things you get when you join Theta Traders is, first of all, you get Lance's expertise. This guy is obsessed with this stuff from what I can see. You seem to basically be it's your life, and you've been doing it for a long time and you're good at it. And it's not many people that come across they've been doing it for years. You might have somebody who does something for a month and then it's okay, well, they got lucky for a month. Lance has been doing this for years and years and years, and consistently hitting 4%, 5%, 8%, I think was some of your months that you showed me in the Discord. So so you get all these cash secured puts. So you can do just pure options trades where you sell these cash secured puts with a 90% chance or higher of a consistent return with a stop loss of 3 times the premium. So we're not talking devastating losses. That's always a question that comes up. You're talking you might hit 2% a day with a 0 DTE, but you're not going to take a 50% loss on the next one. So so Lance is doing those in the Discord. One-on-one Zoom mentoring calls are included in the lifetime or yearly subscriptions. The Discord has grown pretty rapidly, so I don't think Lance really has the time to be able to do this with every single person. So it's kind of reserved for this lifetime membership deal. And so obviously you get the 0 DTX, you get 2 very concise trades every day towards the end of the day. Lance posts them in his options trading channel. One's usually a spread and one's usually a cash secured put, so you can kind of take your choice, have a look at it. You've plenty of time to place these trades. They're well thought out and they don't take a lot of buying power. You're focusing more on high IV strategies, so it's definitely something you can do with a few $1,000s as opposed to 20, 30, 40,000. You can scale up if you want, but it's also a good starting point for people wanting to use smaller amount of capitals to get the hang of this. And it's probably what a lot of people that are going to switch to the new part is, which is the futures contracts right here. So these are the new things we're adding in, as basically the futures contracts, the wheeling of the futures. That's going to go only to the lifetime or yearly members. So far with the futures, not including the wheeling part, it's 100% win rate this year. So I think we covered that briefly in the last question.
Look at the weekly MES on the trade log that you shared.
Yeah, it should be on there. But the big bonus for the Inner Circle members, which is what this particular kind of one-off, or at least till the end of the week webinar offer is Lance also does a lot of stuff outside of Theta. So you think that's bad enough, right? He's doing all these, just so many awesome different trades, getting those different buckets in, right? Those different profit buckets. But he also does a whole bunch of other stuff, which he doesn't share with the rest of the Discord. And that's this stuff about his longer term investments, lots of details about how he manages and does all these calculations and all the work behind everything that he can explain, including things like Roth IRA and buy and hold purchases that are also great extra buckets to add to this whole repertoire of really smart buckets, profit buckets and income generating assets that he's doing. You also get Lance's Workshop, which is a dedicated channel only for Inner Circle members to look at more of the different trades. So obviously that's where Lance is going to dedicate more of his time. Super helpful guy overall. My experience is, I've been doing this for 5 to 10 years now, working with different people in this industry, and Lance is by far the most helpful and the most giving of his time and energy, as well as being one of the smartest, most organized traders I've ever met. So this is really valuable, having one-on-one, unlimited essential access to Lance for all this. And so in this page, I'm going to put a link in the chat box in a minute. You can see all the different testimonials that he's had over the last few months from running these services, and they're all great. So we're all really happy with the service. I'm really, really excited about it. So for you guys that might think this is for you, or if you're already a current Theta Traders member and you want to upgrade, because going forward, a lot of new stuff is going to be added into the Inner Circle, which won't be available in the main Discord. Otherwise, it just gets crazy, right? We're doing a Discord, and there's going to be dozens of different strategies, and it's just going to be like so overwhelming that it's going to be kind of tricky. So
right, all the current members that are in quarterly, you'll still receive everything you currently are in your 0 DTE and spreads. But for this Inner Circle, we're going to be adding on all the trades that I do. I'm literally posting a trade. I'm like waiting to get filled. I put it on Discord and I'm about to send it. I'm like, oh, I got filled, and then I literally just send it.
Yeah.
So you guys are getting in real time on these orders.
So if you don't mind, I'm just going to share one quick Zoom call experience. Fairly recently, I was on a Zoom call with you, Lance, and I mentioned to you about how I own 100 shares of Norwegian stock. And that's not a stock that I'm sure you've played it at some point, but I just told you about what I owned. And I said, hey, I want to sell a covered call. What do I do? And you, within practically a minute, you basically told me, hey, consider this. Obviously it's my money and it's my decisions. And that trade was 100% profitable, expired worthless. So just wanted to share that because that's a personal touch where a lot of times, you're kind of in that box, if you will, like, oh, well, I never alerted that trade, so I'm not going to tell you about it. It was not like that at all when I was on the Zoom call with you. So I definitely appreciate that. And that's definitely something that not everybody has that opportunity to work so closely with you. So thank you.
Whenever anyone in the Inner Circle has a trade that they currently have on and how to manage it, feel free to let me know the details. I'll be more than happy to help because I'm learning as well. And just looking at your personal situation, if you might want to go for that little bit of a home run play, or if you want to just take your single and then get out of your trade, those are definitely things I like to help out with. So it doesn't have to be an official alert that I gave out. It's all open for whatever you guys need.
Yeah, Shyam saying the Inner Circle is a dirty name for me. Yeah, Inner Circle does sometimes conjure up overpriced $10,000 Inner Circle memberships, but in this case, it's nothing like $10,000. I think you'll find it's
That's
worth.
next year's rate, right?
Yeah, that's next year's rate. Yeah, see. Yeah. No, that's right. Join now or tomorrow will be $10,000, and then we'll just vanish on you, never see you again. So
I ain't going anywhere, guys.
no, and that's one of the things I love about Lance is like this guy is dedicated to what he does, and professional teachers. So teaching this stuff is probably more fun than teaching your science, right?
Well, they both have their pluses and minuses.
Yeah. Long live Lance, good job. So here's somebody posting, Cheyenne, long live Lance, good job. I love what you do for me. Honestly,
I will also maintain my health by exercising and eating well, so your lifetime members will get more of me.
Yeah. So anyway, like I said, 5 to 10 years of me being in this niche, signing up for things as a consumer, but also partnering with people to promote things. This is, in my opinion, one of the best deals you'll ever see. A lot of people will sell you garbage for this price. Lance is it's like the opposite end of the spectrum. It's ridiculous. So, hopefully that's interesting to you guys, and reach out to Lance or me. We can put our emails in, right, Lance? Or
yeah, you can put my email in as well. I'll just send my personal email this time on it.
Are you able to type it in, or?
Yeah, I gave it to you in the chat if you want to just send it out.
Oh, okay, cool. Yeah, so I'll post it in. So feel free to reach out. Lance often jumps on Zoom calls and things with people if you're not sure that, maybe theater traders or this new strategy with futures is where to go. Just reach out to him because he will answer every question.
What's the trial offer? Isn't there a trial for this?
No, we're just going straight to the lifetime here.
Okay, cool.
So, yeah, I mean, honestly, like every time we do one of these, we get dozens of people signing up, and and they all seem happy. Half of them are commenting here. So,
yeah. But if anyone's still a little bit on the fence, feel free to send me an email. I'll go over anything that you have any questions on before you might want to sign up.
Yeah. Sounds good. So I think we've covered everything. I think did a good job of making me understand more about what you're doing with the futures stuff, and I think be pretty good. Does anybody have any more questions? Give it a couple of minutes. Doesn't seem like it.
Place a quick MES trade while we're waiting if you want.
You've got a lot in MES. Everybody's away doing it. That's what they're doing there.
I'll ask a quick question as well. I'm kind of curious. What's your favorite trade? Because you do so many different types of trades. Is there, because Zero DTE has some adrenaline rush to it. The 3-month SPY, I don't know. I don't think you guys talked about that one, but the 3-month SPY iron condors thus far, I think they're flawless or they're close to flawless, at least for what I'm doing.
I think one stopped out. But the rest of the year has been good. I like those the most, to be honest. They're really long dated, at least 3 months out. With volatility pretty high right now, you could profit just with VIX going down. And even if the stock doesn't move or even moves in a certain direction against you, if the volatility goes down, you can still get out at a profit. So right now with the VIX near the mid 20s or so, watch it tomorrow when it hits near 30. I'm guessing after Powell talks. It could be a good time to enter a long-dated trade at that point.
I see.
And I did to the group in the Inner Circle. I said, this is a 90-day DTE, but you might want to wait until after Powell, and then you might get a little bit more premiums for those same strikes, or you could be even safer on your strikes and still get a good return off it.
Got it.
Pretty cool. Yeah. So I think we covered everything. Valuing stocks just said, yes, love the presentation. Good. I hope it was helpful. I think it was helpful for me. So, pretty good. All right, guys. So I'll post that link to come and join the lifetime one more time for you guys. Let me just post it into the chat. But feel free to message Lance, message me for more information. You can also come and join the Discord. We can send you a link for that as well. But it won't include a lot of this Inner Circle stuff, which is the futures, the extra help from Lance and all this stuff. So, but there is the link to come and join the Inner Circle. I think we're going to keep this going until probably Friday, right? I think that's what we decided once. We've been kind of underselling this whole thing for a long time now, so the current prices are just being so low for the value that you're given, Lance. I think the prices are nearly double that, and a lot of other discards are given less value. So
yeah, me and Russell are deciding on upgrading the pricing after Friday. So if you are interested in getting this, you're still a little bit on the fence, feel free to send me an email. So go over any questions, but we will most likely raise the rates next week.
Yeah, that's kind of the plan. So
that's all for future members. All the current members are locked in.
Right. Yeah, exactly. But if you're a current member and you're doing the quarterly or monthly subscription, I think it would be well worth the investment to upgrade to the Inner Circle, just for all the extra bonus stuff that's getting added in, and that perfect one-on-one mentoring with Lance. And honestly, I've seen guys that will do a Zoom call and they'll charge $400. Lance will do them for free, essentially throw it in with the Inner Circle membership, which 2 or 3 of those and you've paid just with that, never mind all the alerts and everything else that's getting added in. So I think it's a superb deal.
Yeah, if anyone's in any current positions that they're worried about, once you join that Inner Circle, we could do a Zoom call and we could go over some strategies on your current positions. And even if it's not a recommendation or alert I gave, feel free to definitely let me know your positions and we can help out.
If you look at my testimonial that Russell put up, $1,600 was made in a week. So that's
that was in Alaska too, right?
Yeah, that was with limited internet access. So just put that in perspective, and that was a while back too. So regardless, I definitely think that there's a lot of value. Really do appreciate all the sacrifices you're making, Lance, for everyone in the group. You're going way above and beyond. So thank you.
I appreciate it.
Yeah, that's pretty good. All right, guys. Well, I think we should wrap up there. It's been just over an hour and it went fast. And I think hopefully we got some information across. And I guess most of you probably are in the Facebook groups. Either Lance is in or I'm in, or seems like there'll be some overlap. So yeah, feel free to reach out for more information and good luck trading tomorrow. I guess hopefully the markets don't get destroyed with the FOMC. Hopefully we don't get a huge move either way, get trapped during the week. So good. All right, David. Yeah, Casey, it's good to see you guys on, and we'll talk to you soon in the next webinar or on the Discords. Good. Sounds good.
All right. Bye, everybody. Thanks a lot.
Cheers.